Hello, I'm Richard Murphy and I want to talk about a topical issue in tax at the moment, which is capital gains tax. It's topical because the government has decided to undertake a review of capital gains tax and has just announced that the Office for Tax Simplification will be doing this. Now, don't be confused by the name. I don't think it's ever simplified much about the tax system, but it certainly does try to make it more effective. Is capital gains tax effective is therefore the question that needs to be asked. But actually that requires us to understand what capital gains tax is all about. And there is my concern. Capital gains tax was introduced in 1965. The Chancellor of the Exchequer then was Jim Callaghan, who later went on to become Prime Minister in the late 1970s. And he said he was introducing capital gains tax to stop tax avoidance. And the tax where the tax avoidance was taking place was income tax. And what worried him was that people were transferring their income into forms of financial speculation, as a result of which they fell out of tax because there was then no capital gains tax. Now, let's just explain that. Capital gains tax is a tax charged on the profits arising from selling assets. Now, what is an asset? Well, it's not your normal run-of-the-mill things that you own to let life go on. It isn't your car or your household property. It could be a property itself. It can be shares in a company. It can be a company as a whole or a business. It's a financial asset, or it's a tangible, large-scale physical asset that we own and hold for the long term, often with the intention of making a profit. But it can also be something that is used for financial speculation. So, for example, shares can be manipulated for this purpose. Now, what worried Jim Callaghan then, and which worries many chancellors now, is that people with the opportunity to do so, for example, many self-employed people, will structure their finances so that what should be subject to income tax is subject to capital gains tax. Well, that seemed to Jim Callaghan to be unfair, seems to many people to be unfair now. And the purpose of capital gains tax was to try and create a level playing field in taxation between the two taxes. That hasn't really worked. And the reason why is very simple to see. First of all, Jim Callaghan suggested that there should be a significant similarity in rates between the two taxes. And the only person who actually ever finally did that was Nigel Lawson, a Conservative Chancellor of the Exchequer, who did it in the late 1980s and through much of the 1990s. But we don't have that now. The maximum rate of capital gains tax in the UK at present is 28%. The maximum rate of income tax is 45%. A person who pays 20% income tax in the UK only pays 10% capital gains tax, so half. And a person who manages to get part of their income from financial speculation, subject to capital gains tax, gets a second annual personal allowance for offset against that tax, in addition to the allowance they already get for income tax. So effectively, they get two sets of annual tax-free allowance. The result is that we have a very unfair tax that doesn't collect a great deal of money, only a few billion a year in many cases, and which fails to support the income tax, which was its primary objective. Now, many people think capital gains tax is a tax on wealth. I've got to say, I don't think it is. It's a tax on the income from wealth at best, or it's a tax on income diverted from income tax into a lower tax form called capital gains tax at worst. So the purpose of reviewing capital gains tax now is very simple. It's to see, can it be made to work better? Now, of course, the government's motive is fairly obvious to see. The government has said it wants more income as a result of the coronavirus crisis, and capital gains tax looks to be a fairly innocuous place to start in trying to raise more money, and I don't blame it for that. But it has to remember what it's trying to achieve, and that's my point in this video. Let's not obsess about the fact that it's a wealth tax. Let's talk about the fact that it exists to prevent the abuse of income tax, that it's about creating fairness, that people who work for a living aren't taxed more than those who do financial speculation for a living. And let's create that equality, which creates a fairer, more equal and just society, because then everybody feels better about paying their taxes, whatever tax it might be, and that's got to be our overall advantage if we're going to run a fair, prosperous and sustainable UK. I'm Richard Murphy. I'm going to be talking more about this issue over coming months because this is something that's going to be in the news. If you're interested, please click the subscribe button below to this video series. Follow me on Twitter at Richard J. Murphy or look at my blog, Tax Research UK, and I'll see you again soon.